Awesome, Jeremy. Welcome to the podcast. How are you doing today?
Yeah, man, I'm just feeling good. It's good to be on the cast with you and talk about some stuff I think we're both excited about, man. So should be fun.
Yeah. Yeah, I'm glad to have you here and to dive into Paystand and a little bit about blockchain. So yeah, before we, do that, tell me a little bit about yourself and your background. I'm curious, like, where you came from, how you kind of like got into the space, what got you interested, what got you going towards Paystand. So yeah, give me a little bit of that.
I would not have expected when I was a kid that I'd end up spending my career in B2B finance, but sometimes like the world just kind of works in a certain way. I thought I wanted to be an astronaut, I suppose.
An astronaut.
Yeah, wouldn't that have been cool? But you know what? I hear there's a correlation between folks who do payment companies and rocket ships. So you never know. You never know.
Well, there's a correlation between blockchain and astronauts in terms of going to the moon. So, I mean,
That's true too. That's true. Diamond hands. So, yeah, let's see. So I guess my journey into this space, I've been in tech for about 20 years. First 10 years of my career was in kind of high growth startups that got fairly big. And my focus was mostly on the enterprise space. So companies that basically built the equipment that became, the cell phones that we use today. And one of the things in the first 10 years I experienced, which is what our customers experience, is like there's the big enterprise companies are trying to deal with becoming more digital, their DNA more digital. And so they would, invest in cloud. So super kind of traditional stuff, right? So think Salesforce and ERPs and that sort of thing. So I spent a bunch of time in that space. And what was always fascinating to me was the big companies would invest all this, time, energy, and effort and money into finance or in every other part of the business, but not the finance aspect. So it probably is surprising, but the vast majority of commercial payments in the U.S. are still done through paper checks. So there's a big opportunity, a big problem that solved that I was a customer of, that I experienced. I worked with a bunch of ERP companies, worked with a bunch of commerce companies, et cetera. But quite honestly, I wouldn't have started Paystand if it was just that. So probably this, everybody has a pivot point in how they go down the rabbit hole in blockchain. So for me, very early on in 2008, my family, it's a much longer story, but my family was one of the many millions of Americans who was affected by the financial crisis. They lost their home. I was in between tech companies at the time. And so I just decided to go back and do my grad research on why were banks too big to fail? What were the systematic problems with commercial banking back then? Because it turns out that the financial crisis back then was really a commercial banking problem. And when you study it, you just realize that there's a bunch of things wrong with banking, and especially commercial banking. And the consumer banking stuff is pretty sexy, but the commercial banking is actually critical to our economy, and less folks were focused on that. And so while I was doing, my master's thesis, this is maybe 2009, 2010, I just, went down the rabbit hole in crypto. So, I was very, very early involved in, sort of helping with some of the early dev work in the Bitcoin space. And what I realized out of a few things was a lot of innovation was going to happen in the consumer side of let's call it open finance. But I didn't see at the time much folks focused on the B2B side of open finance, and arguably it's at least as important. And so, we started Paystand a while ago now. 2013 is when we started working on the business. It's been sort of live in the market for quite a few years now, to basically build transformation in the B2B side of commercial finance. And so Paystand basically today is a B2B payment network. So you can imagine what Venmo does for consumer payments, we do for commercial payments. And we use, sort of open finance to basically transform how that process is done. And so it's a very, very compelling value proposition for large companies that were effectively, not using digital, and they were using paper checks, or they were just dealing with massive fees from banks, and we make that all go away. And so, it's a huge ROI for our customers. And then the kind of behind the scenes secret sauce is, I guess we're one of the largest commercial blockchains in terms of volume today. So.
Yeah, that's awesome. Is it primarily US based, or are you guys in other jurisdictions as well?
Yeah. Today, our main focus has been locally, being in the U.S. So just to give you some stats, There's about 18 trillion in commercial payments today. About half of that commercial payment volume is still done over paper checks. The vast majority, somewhere between 80 and 90%, depending on which analyst you look at, is doing some kind of legacy payment, meaning a wire or a card or some other thing that was built before the internet. And so that's a problem for our customer class because, if you think about it, a commercial payment between two big companies, these are large payments with companies that have very, very low risk, that have signed contracts, signed invoices, and so the notion that the payment flow is both not modern, meaning, it might be a manual process, or it's going through some banking system that's going to charge them a bunch of fees, doesn't make a lot of sense. And so we come in and we just bring, a bunch of transformation and ultimately a bunch of money back on the table for those customers. So.
Yeah. Can you give me an example of like a B2B type of payment or transaction that's like typical that you guys help with?
Yeah. So, if you look at, let's say, in the last year, healthcare supply chain is a big deal, right? So, how does the manufacturers of PPE and masks, get down to the wholesaler and the distributor, and then how do those get to, the hospitals and the retail folks so that we can buy it? And if you remember, there's a big shortage, right? And so that's because that supply chain is not terribly efficient. Part of that is because, payments are not terribly efficient in the supply chain. What we do is basically three things. We say no paper, no fees, and an open industry. The first is basically a cashless process. So we help digitize the payment flow. So when somebody moves goods and services, so let's say, a big bulk order of masks to a wholesaler from the manufacturer, we help them actually get paid when the movement of the money happens. So when a truck delivers, those goods, those things are actually in digital systems, but the money movement is actually like disconnected from it. And so we just help that process be kind of seamless. So maybe the analog way to think of it is, when you walk out of an Uber, money just kind of magically moves. It's sort of self-driving, right? You don't have to exchange hands anymore. We do that, for these supply chain issues. The second thing that happens is we call this payments as a service, which is normally when that money moves, there'll be a fee associated to it. So think a wire fee or a credit card fee. The problem is, for $100,000 payment, let's say they're buying $100,000 worth of masks. Can you imagine Visa charging 3% on a $100,000 invoice for masks, right, between a manufacturer and a distributor? It doesn't make any sense. And so what we do is we own our own network, and when the money moves over the network, there's no fees whatsoever for the commercial companies. And so that means instead of paying Visa, let's say $3,000 to move ones and zeros between banks, there's no cost associated to it on the fee side for the supply chain. So they can move the money instantly, they can move the money automatically, and they move the money without fees. So it's a big deal for the CFOs.
Right. How do you guys make this more seamless for these companies? You guys are leveraging blockchain for this, correct?
We are, but the key thing, we've been in this space for a long time, sort of under the radar, is what we've learned, over many years is, our class of customers, they want the innovation, right, of what I would consider as open financial infrastructure, so blockchain and DeFi, but they want it in, dollar denominated, currency, right? And so the key for us is basically the experience for the customer is as if they were just running over traditional banking system, banking infrastructure. It's just how we move the money is different. And so, we kind of say it this way to the enterprise. Blockchain is basically the new cloud. So for an enterprise customer, companies like Salesforce were these big innovations for them where an enterprise customer doesn't care that cloud, the technology of cloud. What the enterprise customer cares about is cloud was basically creating like better, cheaper, faster, more efficient software for them. And what we basically do is we just use basically the blockchain to create better, cheaper, faster sort of experience for the customer in terms of the money movement side.
Okay, got it. What do you open mentioned open finance? Like, what are your thoughts on things like DeFi? 'Cause they're really taking over the space right now, especially making a big wave in finance and in the blockchain world, obviously, and becoming this really big niche. And they're disrupting so many different centralized financial services and in a good way. I'm curious what your thoughts might be on that.
Yeah, I think just like we looked many years ago as like, you know, Coinbase had a recent IPO. Payments was one of the first, sort of instruments with digital currency and crypto in general, mostly on the consumer side. And we said, how do you take the best of that and apply it to the B2B side? Um, I'd say in our company is fairly far in that maturing process. So, we're doing billions of dollars today. It's created an enormous amount of value for customers. I look at DeFi very similarly, which is DeFi, and if you look at the space right now, is mostly a leading edge consumer-ish type of experience. So, let's take the one that most people would think about as something like a compound, where you're getting, sort of yield, right? That's a really cool thing. On the consumer side, it's very frontier. But you'd argue, what's the equivalent version on the commercial side, right? You have big treasury companies, big CFOs that are looking at their treasury right now and going, how do I get yield, right, when all this money's sitting on the balance sheet? Or what is the way to hedge against risk, right, in the interest? So a lot of things that I think consumers have been looking at in both crypto and DeFi for the last, I don't know, 5, 7, 8 years, uh, B2B is starting to look at. And so I think Paystand's kind of lens of the world is payments first, right? Because, for the CFO, our class of customers, revenue is the lifeblood of a company, right? And so first, we help them enable transformation on the revenue side. But then once you do, open financial infrastructure, let's call it the stack of the CFO. There's a bunch of other really powerful things that I would consider as frontier right now in DeFi and OpenFi in general. But we fundamentally in the company's made a bet that it will be, sort of the par for the course in the long run. So.
Yeah, how does that, because I know DeFi is very like P2P, person to person, in a lot of ways is for the um average retail customer, not necessarily a commercial customer. Like, is there an angle for, because you mentioned that a minute ago, like an angle for a commercial enterprise or business to leverage DeFi a little bit more, so like maybe from a loan perspective or from a liquidity perspective? I'm sure there's a lot of interesting angles.
Yeah, and I think that's the really exciting thing. The way I would say our product team looks at this is take every financial service that's known to man right now, and you could map it both on the consumer side, but in our world, in the commercial side, to go most of the time, not all the time, but most of the time, having open decentralized infrastructure actually just makes the process more efficient. So, I think you could actually look at all the fintech that's happening today in my world, and most of the fintech is actually on traditional rails. So most of these big companies you hear about, whether it's Stripe or Plaid or a bunch of them, they're still operating under existing infrastructure. You can imagine a world not far off from now where you replace all of that, with much more efficient, already built smart contract infrastructure. Because the reality is, what many of those companies, it's very trite at this point. What they've spent 40,000, lines of code on, you can do in 40, right?
Mhm.
And oftentimes in smart contracts. So you're right. Lending is an example of it, but there are many examples, and you can just kind of go down the CFO's stack there. So I think we're really early, and it's extremely exciting. So.
Gotcha. In terms of your customers, is it like big cap companies, or can like a smaller SME or mom and pop shop take advantage of Paystand as well? Or like, who's it really geared towards?
Yeah, for us, it's usually like mid-market companies and small enterprise generally. And partly it's because we don't deal with small businesses, mostly because, if you think about what our value prop does, when money becomes just software, you kind of think about, okay, money should be instant, money should be automatic, and money should be at, sort of little fee structure from the banks. The larger the company, the more that matters, right? Like time is money. Like the faster the money flows in the corporate world, that's something called DSO, which is basically how long it takes you to track your revenue down. So, big CFOs spend a lot of time, energy, and effort to go get their revenue or get their collections. And so getting that faster is actually a very important thing. If you're too small, that doesn't matter too much. Same thing on the automation side. So what happens is, in our world, especially post-COVID, oftentimes like these big companies, they'd send everybody to work from home, but they actually had like their finance staff actually go back to the office to just basically collect checks and kind of do the printing, because if you don't do that part, like the business doesn't keep operating. And so the bigger the company, the more that matters. And so us being able to make that entirely automatic is a really big deal. And then if you just go back to the fee structure, so the cost, that whether it's a bank and wire fees or Visa charging you or otherwise, the larger you get, the more that cost actually becomes really annoying. I just got my overpriced latte a minute ago, and if somebody like Square and Visa charges 3% to a merchant on a $5 cup of coffee, it's annoying, but it's maybe reasonable value exchange. It's an entirely different thing for $100 million company or a $1 billion company when these are very, very large transactions that are really well known. So
yeah, and fees like that on a multi-million-dollar transaction are, that's a lot of money too. So I mean, companies, like little changes and stuff like that make a huge difference down the line. It could be difference between millions and millions of dollars.
Yeah, that's right. So I think there's a lot of, I think, really cool blockchain companies. We're a very much under the radar kind of meat and potato company. In our view is, you basically had to have a Google kind of help usher in, the wave of the internet. But you also had a Salesforce that said, how does that apply to the enterprise? And our view is there will be a company that's of large size and scale that gets commercially successful, the B2B version of OpenFi and DeFi. And so, we're inning 2 or inning 3 in that game. So
yeah, that's where you guys hoping to become, right?
Yeah, I mean, I think so. If it's not us, it'll be somebody, right? And what I see right now is, in the space in general, you have a bifurcation. So you have like a lot of really cool, like next gen things that are going on in crypto and DeFi and blockchain in general, mostly on the consumer side. And then you have all these fintech companies that have huge amount of valuation, huge amount of sort of value increase, but they're using legacy infrastructure. And so we just believe that open financial infrastructure is the wave. And so we've built our company there first. And we think that the key is to be able to take the technology innovation and apply it to maybe more normal commercial language that an insurance company or a manufacturing company, in the middle of Ohio, recognize. Because at the end of the day, all they want is their revenue faster, cheaper, and more efficiently. And
right.
How we make those rails better and remove, sort of the stakeholders, I think that's more kind of the philosophy stuff. But
yeah, for example, like if my business wanted to use it, and let's say I had a bunch of logistics to handle, and I think this would make, things more seamless, maybe a little bit cheaper down the line, or just, it makes more sense. Do you have to find a company that's already using Paystand or will accept Paystand? Like, is that like a barrier, or is it something that, integrates with another system, or like what kind of barriers exist if someone wanted to jump into it?
yeah, so in general, we work with companies that have already, basically implemented cloud ERP or CRM. So think of like the NetSuite, the Salesforces of the world, the Sage Intacct. So we work really closely with those folks, Oracle and otherwise. And we're probably the largest provider on the sort of AR and finance side there. So that's already, like, if you're in that space, it's very, very easy. In general, though, what I would say is more the philosophy for us is, again, a barrier that we've seen, is if everybody's living in like a crypto DeFi world, that's great. But the reality is, 99% of corporations don't live there yet. And so what you have to do is you have to meet them where they're at. And the analogy I would maybe give is, our office was the original office of Netflix. And, I think what we're trying to do is with payments as a service is basically, take that subscription kind of software concept that Netflix and Spotify do on the music and media side and apply it to money. Um, and, in the early days of Netflix, they didn't necessarily, have everyone in the planet have digital high def, fast internet right into their, living room. And because of that, they had to kind of make it accessible for folks, um, that were basically going to Blockbuster. And so how did they transition people from DVD to entirely internet enabled media? What they did was they basically, I don't know how many people remember this, but they shipped a lot of these red envelopes. And what was fascinating about it was kind of like a half step, right? It was sort of like, hey, when we deliver red envelopes in the mail, it's kind of like you will get in the long run. You get unlimited access to media. It's not like you have to go to Blockbuster and drive there anymore. So it's faster. The business model is cheaper. You can get all you can eat as fast as the mail moves. And then at some point people were using the red envelopes and they just said, well, I just rather hit, stream now. And the product experience for us is kind of like that, where we say, look, you as a customer, your customers downstream don't have to use Paystand. We have hundreds of thousands of businesses that do use Paystand in our network, but even if you don't, you can just pay us however you're going to normally pay. And then what Paystand will do is we'll take on all of your receivables, all of your, invoicing process, all of this sort of workflow. And then over time, your customers will move from the DVD, in the mail, which is better than the DVD at the, Blockbuster. But then over time, they'll move to entirely digital experience, and because it's just better, everybody likes it, right? And so
Exactly.
that removes the barrier. So, and I think that's one of the reasons why we've grown so fast. So
What's so interesting about that, using Blockbuster and Netflix as an example, is the fact that everyone used to enjoy going to Blockbuster. Like, it wasn't like a depressing experience. People liked going down the aisles and browsing for something and coming back and dropping it off. Like, it was like an experience, especially for me as a kid growing up. What was interesting though with Netflix is once they went the streaming route and the internet got good enough that you could do that with enough bandwidth to actually make it practical, it was the efficiency in your daily life that trumps the dopamine kick that you get from actually going to Blockbuster. And I think that's where a lot of people go wrong when they look at companies and tech and going into the future. It's always like, they love what they have right now and they enjoy it, and like we all do, but there's always something that's just more efficient. And it doesn't matter if you like it or not at the time. It's, if it's more efficient, it's more practical, it's going to win out in the end, just because it makes life easier. So just a point I want to make, so many people just, I think they gloss over that, especially in tech. And I see it all the time with different companies. And you just go down the list all day on it. But no, what you're saying makes a lot of sense.
Yeah, I mean, if you think about the psychology of all this, right, especially a business who's going to be a rational buyer, it's either because of cost or efficiency generally. And the cost is fascinating. If you look at the Netflix model, they had this very early days. One of their slogans was like no late fees. So because you're right, the experience was good until the experience was bad, right? And the moment you sort of start piling up this cost, and the equivalent kind of cost structure I think about is my favorite bill on the planet I pay is Spotify, right? Because I kind of look at it and go, wow, I get like unlimited access to this. This was like a thing that didn't exist before. And now, I can get everything. And so there's this like entirely new value. And then you go to the efficiency side, like you're talking about, and you say the same thing, which is, yes, there was a dopamine replacement, not just a loss of dopamine by going into the Blockbuster experience, but going, hey, the new experience is actually like in the Netflix case, it's actually binge watching, right? It's like I can just keep doing it
Hmm.
over and over and over again. So it's more efficient in that way. And so, I think the key thing for blockchain companies in general is to look at these kind of two areas and go, how does the efficiency actually get better, right? In our case, it's kind of self-driving money. It's where finance people were doing stuff before that they don't have to do anymore. And that is kind of the definition of smart contracts, actually. It's really fascinating. Like smart contracts literally by definition are defining like a financial instrument that can auto
Hmm.
execute, which is just stuff humans don't need to be doing anyways. Um, and then the cost structure is the same thing, right? So you can go, oh, wow, there's a bunch of layers within, financial infrastructure that just don't need to exist anymore. And all of that, I think Amazon says, what is your margin, right, is my opportunity. So it's kind of the same thing.
Yeah, speaking of, financial layers and infrastructure that don't really need to exist anymore or that are becoming irrelevant very slowly, um, the banks are starting to kind of fit into that category. I mean, hell, put blockchain aside, the tech companies are killing banking alone. Like you can have a far better experience banking through the Cash App or Apple's credit card, or one of these other smaller banks owned by a tech company, than you can going to Bank of America or Wells Fargo these days. It's just a headache. But do you think that you know can you imagine a future without banks at all, like where it is completely decentralized, or maybe partly owned by the tech companies and it's just a small part of a different business? Or because it just feels like traditional finance is starting to slowly fizzle away and there's just so many other options now.
Yeah. On the commercial side, I would say I'm not quite as bullish that like, you know, DeFi eats banks entirely. What I would say is people misinterpret what banks are actually good at, and I think people kind of think banks like are tech companies, and they're not. Banks are kind of regulatory and trust instruments, and especially on the B2B or commercial side, you actually need regulatory and trust instruments. Um, but that's kind of where it ends, right? And so what tech's doing is, I would say the question tech is should be asking is um, not so much like does B2B need banks, but what's the point of the networks now? Like, when does this all become open standards, right? And then what can the financial players, whether it's a bank or whether it's a provider like us, when do those companies how do they think about the network where there's a bunch of stuff in the middle? So let me give you an example of where I think both a tech company and a bank could benefit from blockchain,
Mhm.
where basically today it's just risk and cost. So a friend of mine is the CIO of a bank, and they have commercial customers. And one of the things that he was telling me the story is um, the way banks will manage like security process on a large payment is like a manual checksum. So they'll say, if a payment's over, I don't know, $10 million, we actually like manually review, as the payment goes. So they were doing this process one day, and what they find is a company that they normally process the payments for over a wire, basically, the account number seemed off. And when they unwinded it and they contacted the companies, what they found out was the companies got hacked, but not hacked in like a high profile way, like the bank got hacked, or
Mhm.
the financial system got hacked, but actually it was just an unsuspecting person in the finance team's email got hacked and phished. And so somebody changed an invoice number, because the way the banking system works today is the wires or the ACH numbers are just like literally the numbers that are sitting on your checkbooks. And so somebody just changed one of those numbers in the invoice. And so what ends up happening was a payment, a $10 million payment, literally goes not to the company it was supposed to go, but actually to an account in the Caymans or whatever. And because a bank system is manual, like literally it was 5 days later before somebody actually was like going through the books to check it off, and found out that payment was going to a place that it doesn't normally go to. The happy ending to the story was they were actually able to go and kind of track it down, and the hacker was hadn't actually came in and gone and collected and withdrawn the money yet. And so they were able to claw it back. But had they not, that money would have been gone. And arguably, if it would have sat there another couple of days, it could have or should have been gone. And so, I think, one of the products that we offer kind of freely and openly to, the system today is something we call a surety. And what a surety does is a blockchain product that basically uses the same auditing and validation process that we use for our own blockchain network, and we open it up for everyone. And so why is this important? Because if that would have happened either on our own network or somebody using our surety product, there would be validation to ensure that somebody can't change records like that. And so that would have never happened. And not only could that not happen, externally, somebody hacking, but internally, sometimes you have these cases like Enron and other cases where there's massive amounts of fraud that will happen in the system because you have an internal person who's basically a bad actor and changes a number somewhere, and lots of downstream things happen. And today, the only way we deal with that is either humans, which are very, very fallible, or you throw like these technology layers on top that are very, very inefficient. And so we think of like blockchain as one way that can sort of enforce a higher degree like of authority, assurity, and truth. And so that doesn't make that bank go away per se, but it certainly makes the process more efficient. And if the process is more efficient, you need a lot less of the layers and you need a lot less of the cost. So,
Right. That's a good example. Yeah. One more question before we like start wrapping everything up. What's next with Paystand, or what's on the roadmap? Like, what do you have plans for 2021? How do you guys want to expand? Do you have announcements you guys have coming up or important deadlines? What should people be aware of?
Yeah, so I think Paystand's arguably the fastest growing B2B payment company on the planet right now. We've been mostly focused domestically, and we've been mostly focused on a couple key, sort of worlds. Namely, we work with Oracle NetSuite really closely. We work with Sage Intacct really closely. We work with Salesforce really closely. One of the things we're doing this year is expanding. So our companies are growing globally, so we're expanding globally. So there's more regions that we'll start working with in Europe and LATAM, which is exciting. I think another area that we have a new product that we've started at the beta level that we'll have more announcements around is we mostly focus on accounts receivable, meaning getting your revenue. But we have a product that is a really compelling corporate card for expenses. It's in early access right now. What's really unique about it is while the corporate card can be used over traditional payment rails, so it looks like and acts like a MasterCard, when the customers pay over customer to customer, it doesn't go over the Visa or MasterCard rails, but it goes over the blockchain. And so unlike every other card on the planet that will actually charge the receiver fees, our card will actually do smart routing and won't charge any fees at all. And so that's a really, really compelling product that's got expense management and that sort of thing. So we're really excited about that. And then we're really excited about some DeFi stuff that we'll probably announce later in the year. So.
Yeah. Do you have any like tax software built into it, like for itemizing like certain types of purchases? Because I know there's a lot of expenses, from tax purposes that play into using a payment service like this when they're not using like a good old credit card or debit card. Like, do you guys have stuff built in for that to help, your customer when they're doing B2B transactions?
Yeah, I mean, so the thing that's fascinating about B2B is that when you're a larger company, the context I would give here is actually the CFO is much more like akin to a crypto kid than you'd ever think. And this is kind of a funny thought, but like, if I was to ask a normal person, like, how much money do you have? What would happen is a normal person would basically look at their bank account and they would tell you what's the number that the bank account says. If you ask a CFO of like a company of any real size, how much money does the company have? They actually think about money as software already. because what they do is they all have financial software. Any material company has, you know, a NetSuite or an Oracle or whatever, and they do a balance sheet report. They literally pull up a report. The report's not talking about the money in the bank account. The report is like looking at all their assets that are kind of under management. Why that's important is companies of that size and scale, they've already invested in a bunch of that financial infrastructure. They generally have partners on the tax side that connect into that infrastructure. And so, you know, there's lots of tax companies. Avalara is an example. There's lots of tax companies that connect into those pieces. What doesn't work today is actually stitching the money movement together. So what happens is all that stuff lives in the cloud somewhere, and then all the money movement is disassociated to it all. And so our view of the world is basically, you know, you have open systems of record, open ERPs so that you can use APIs to access all this. You have open banking, right? You can see all the information in real time. And then you have open finance, which is sort of decentralized blockchain infrastructure that stitches it all together. That says, hey, look, that info is already mapped somewhere. It's mapped in your tax software. It's mapped in your accounting software. It's mapped in your general ledger. And as the money move map, so smart contracts should be able to say, here's what's happening along the way. And we're going to assert that nothing's changed or nothing's gone awry. So that's, to me, one of the more compelling opportunities of the blockchain is actually to stitch a lot of these systems together that aren't stitched together today. So.
Okay, got it. You also mentioned Latin America too. Do you guys plan on doing stuff down here? Like, I'm based in Colombia and the banking system fucking sucks. It'd be awesome to have something like Paystand down here.
Yeah, we so one of the things, you know, so part of my personal background, I didn't tell too much of my story, but my mother's side is from Mexico originally,
Okay.
right before I was born. So I have a strong affinity to LATAM in general. We have about half our company is based in Mexico today. And so, you know, we power actually one of the larger commercial banks. We have a cool project down in Mexico. And so, you know, I think one of the areas we're looking at LATAM in particular is the financial infrastructure is very far behind. You know, a lot of the companies don't even have, you know, I'm talking about cloud sort of software, cloud accounting software, like a lot of that's not even deployed yet. And so, you know, we're looking at a lot of the financial infrastructure stakeholders to help get it up to speed. So whereas in the US, there's a lot of maturity in everything except for the financial money movement. In LATAM, what's actually is cloud needs to catch up. The financial infrastructure needs to catch up. And so we're spending a bit more time there working with sort of the financial institutions and some of the other folks to get it there. What's cool is that you know, that market's actually growing faster, arguably than the US is. So I think, like, you know, mobile phones basically, you know, leapfrogged a generation in Asia. I think something similar that's happening in Africa and LATAM on the finance side. So.
Yeah, it's growing really fast, and there's some tech that's, you know, leapfrog because, you know, they're a little far behind. But yeah, it's growing really fast. I believe Paystand would do really well down here. I'd use it all the time. Anyways, yeah, Jeremy, thanks for taking the time to come on and, you know, talk about Paystand and DeFi finance, open finance, traditional finance all around. Really appreciate it. Fun talk.
Brandon, appreciate it, man. Thanks for having me on, man. And enjoy beautiful Colombia. It's one of my favorite places on the planet, brother.
I will. It's actually a little cloudy today, but yes, I'll enjoy it.
Killer. All right. Thanks, brother. Cheers.